One of the big questions is,
what is money?
For practical purposes, it exists in a series of heterogeneous databases, very different databases.
do you believe in crypto?
Digital currency may be an answer, but it is the highly speculative asset.
I do own Bitcoin.
There is no second best.
Welcome to the Crypto Curious Podcast, your weekly crypto crash course. Every Wednesday, join us in the dynamic world of cryptocurrency as we cover everything from major stories to short, sharp news bites. If you're new to crypto, we recommend starting with our early episodes where we break down the basics and give you a solid foundation to understand the crypto world. Tune in, laugh and learn. It's crypto made easy. This week on the show, election day is here today. So we have to talk about all it means for the market and its reactions. Tether's record $2.5 billion profit highlights stablecoins, the power in modern finance. Plus, BlackRock's Bitcoin ETF dominates with record profits. My name's Tracy and I'm here with the boys, Blake and Craig. Today we're coming to you from a tropical island getaway. And while the US is busy picking leaders, we're here busy picking the crypto stories for you that are important this week while sipping something cold, boys. How are you guys today?
Good, mate. I just need to keep my sunnies on to keep that glow of Craig's tan out of my eyes.
He needs a tan. He's looking a little pasty white at the moment, but it's nice to be here together.
Yeah, no, it's good to be here, guys. We're here together for a bit of a crypto thing. It's election week. We're feeling nervous, excited. It feels like the greatest series finale.
Yeah, it does feel like it's been a bit of a TV show that we've all been watching this election. And we do want to start off by talking about what this means for the markets, guys, because the election is happening right now. When this goes live, we might have some results, we might not. But what generally happens to the markets when we see a result, Blake?
Well, that's right, Trace. It's like a TV show that we can't turn off. And usually the crypto market doesn't like uncertainty in the macro environment. So post-elections, generally, once traders and investors know what regulatory changes are going to be implemented, there's a lot more assurity, and then people can place bets and invest based on that assurity. So yeah, exciting for this to all come to an end. And as we know, Trump will be potentially firing Gary Gensler once he gets elected, and hopefully buying Bitcoins if he is elected as well.
Did he give us any indication of who in the place of Gensler?
I don't think so, but I think once the president is elected, there's 10,000 roles that they hire for, with Trump personally hiring about 100 people, which would include chair of the SEC.
And I guess the good thing why the crypto folk are cheering for Trump is because everyone he's surrounded himself with, Vivek, JD, Vance, Elon, have all spoken highly of crypto, RFK especially. Trump even mentioned at the Bitcoin conference he wants to put Bitcoin on the strategic reserve for the Treasury. So all this is obviously insane for the industry, but it's probably worth talking about how the market reacted the previous 3 elections, I should say, which they all have caveats, but every election month for Bitcoin, especially 2016, 2020, kicked off. The next 2 months was green. But of course you could argue that 2016 was obviously much smaller crypto market. 2020 we had low interest rates and obviously the money printers were on. So I think with this, even if Kamala wins, I think the market might just want a resolution out of this. So I think regardless, hopefully we'll see a bit of a relief pump. And then 2025 with interest rates coming down, it's a good recipe for hopefully a good year.
Okay, let's see what happens, because by the time this goes to air, we should be right on the thick of knowing some sort of result. Let's move on now to our next story that has been dominating the news. Stablecoins. Thanks to Tether, their latest financial report is out, and they're one of the biggest stablecoin issuers. And they have recorded a $2.5 billion net profit for Q3. That brings its total profit for the year to an incredible $7.7 billion. This isn't just any quarterly earnings report. Tether's results highlight how massive this growth has been of stablecoins and their increasing role in this financial ecosystem in general, Craig.
Yeah, we've spoken about Tether multiple times, and I think we've mentioned this heaps, but they have like 50 employees or something ridiculous. So these numbers that they're putting up is insane. They're now at 67% of the stablecoin market cap now sits with Tether, and they're killing it. They've got reserves of $4.8 billion in Bitcoin, $5 billion in gold. They're holding treasury. It's just obvious in how smart they're being with it. They're providing people with access to stablecoin in the crypto market whilst investing in a diversified way.
I think we didn't want to just touch on this bit of news. We wanted to delve a little bit deeper on this today, folks, because it's clear that stablecoins just aren't a crypto trend. These are a critical component of today's digital ecosystem. So, Blake, how do you see Tether's dominance impacting the broader stablecoin ecosystem, and what could this mean for stablecoins becoming a bigger part of the system in general?
Yeah, we've seen PayPal and others come out with their own stablecoins looking to compete. Visa and MasterCard I could see doing the same thing. But Tether seems to be the darling of the crypto ecosystem and the preferred trading pair against digital assets. I think we've seen a lot of data come out over the past probably 2 years or 18 months showing that regardless of whether or not the crypto market goes up or down, either way, the adoption of stablecoins goes up in a linear fashion, just month on month, quarter on quarter, year on year. And it just looks like an unstoppable force that is becoming a preferred way of not just for trading, but for also remittance and transferring money across borders.
So do you see these being perhaps a bridge between the financial system and the crypto system?
100%. And I think this is really evident through a firm this week called Bridge that was acquired by Stripe. Stripe, for those that don't know, is a big payment processor in the US, and Bridge is a crypto native on-ramp for stablecoins. It provides you with some software to allow businesses to easily purchase stablecoins. That's just been acquired now for $1 billion for a very young company. I think they're only 2 years old. So they've obviously done incredible well, and Stripe sees these sorts of solutions as the future. Otherwise, they wouldn't be putting up such a massive amount of cash.
That's a good point. Your thoughts, Craig?
Yeah, I think as Blake mentioned, the whole cross-border payment situation, it's probably one of the only applications we could actually see. We're in Bali right now, we could pay for a coffee in Tether if we wanted to. Anyone from around the world could do that. It's probably the one thing that's going to be around in the next 20 years, the growth of the market cap. Like, it's been up linear fashion pretty much ever since launch. In 2019, the market cap for Tether was 8 billion. Now it's 120 billion. It's number 3 biggest sort of market cap project in the crypto ecosystem. If that just keeps going up, could we see that one day being number 1?
I think it's possible. That thesis has always been out there, that it is a possibility that stablecoins as a subsection of crypto could end up having a higher market cap than Bitcoin.
Well, look, with these record profits and a leading position in the stablecoin market, Tether is setting a very high standard and making stablecoins hard to ignore. So we'll watch them grow and integrate deeper into the financial world, and we will certainly keep an eye on them. Okay, boys, let's move on to our next story. This was a massive headline this week, and it's coming out of the ETF space. BlackRock's spot Bitcoin ETF IBIT logged record-breaking inflows. So last Tuesday alone, a US spot Bitcoin ETF saw 870 million in inflow total. That was the largest since June. But BlackRock's was the clear front runner, attracting an impressive 642 million in a single day. This pump boosted the trading volume to a staggering 3.3 billion, which was the highest since March.
That's right, Trey. So BlackRock last week especially, they had a $642 million day, then they had an $872 million day. That is insane. And with no real notable outflows from the other players. I will say that we have seen some outflows. Yesterday it was reported around 500 million in outflow, but considering last week brought in, over $2.5 billion of inflow, of net flow, I should say, it just shows that these instos Bitcoin's getting chewed up by these instos. It seems like every few weeks there's a huge inflow day, and I don't know, maybe they just reconcile the books that way.
I might just point out here that it feels like a little bit of FOMO. I know that Bitcoin broke out of a technical pattern in the charts, and institutional traders would be trading these, and that's why we see these massive inflows that come in all together at the same time and push prices higher. Fundamentals may not necessarily be the answer here.
Do you think when it drops 10% in a day, which is possible, that we'll see huge outflows?
Yeah, I think we saw this just a couple of days ago. A lot of this inflow that happened last week has been taken back out of the market via these ETFs, which really goes to demonstrate that there are traders trading larger blocks of Bitcoin through these products.
So I guess this surge just show us that the appetite for Bitcoin exposure isn't a fad, it is growing, and the big players like BlackRock and Fidelity are definitely dominating this scene, but there is a lot more room to expand.
And it's probably worth mentioning before we finish up here that the Ethereum one is still lagging behind Bitcoin. It's obvious in the price action. They've actually seen a net outflow from their ETF launch. We've seen a lot of sell pressure there, and that hasn't come back into the market yet. So, we might see that turn around early next year. If institutions are FOMOing and Bitcoin starts going up, they might want to diversify, put some in Ethereum. But it just shows that exactly the same as the retail trader. Like Bitcoin leads, and then we'll see the trickle down into the other ones.
Let's take a break there, folks, and when we come back, our short, sharp news bites. Welcome back. You're listening to the Crypto Curious podcast. Time now for our short, sharp news bites brought to you by the Bamboo app. Heading up first, MetaMask have laid off 20% of their workforce. Consensus, the company behind MetaMask wallet, announced layoffs of 20%. The CEO said the decision was tough macroeconomic conditions and regulatory challenges, saying it's essential for the company to remain agile and competitive. The announcement follows an ongoing legal dispute with the SEC over MetaMask swap services, which the SEC argues should be registered as a broker. The Consensus employees affected by layoffs will receive a generous severance package and extended stock options window. So they're being looked after. We haven't had any layoff conversations for a while, but I think we've got another one here, Blake.
That's right. We're seeing more layoffs at DYDX, which is a decentralized derivatives platform or blockchain, and they're laying off 35% of their workforce. So this is just really an interesting time in the market cycle to be letting people go. The assumption has to be, as we move through this 4-year cyclical pattern of crypto, that these products are going to be used more and more, therefore require more and more staffing to be able to support the product. And it's just interesting to hear that at this point they're letting people off.
What else is happening in the world of crypto, Craig?
Well, our friends at Coinbase, they came out with their earnings report, which we always like to follow. The coin stock dumped 7%. And this is due to the fact that crypto trading volumes were a little bit down. As you remember, summertime in the US was choppy, not much happening. So they did miss earnings, but they announced a $1 billion buyback program, which is generally seen as pretty bullish. But yeah, Wall Street decided to dump it. And yeah, it's still underneath its IPO price of $250, which I just find insane.
CEO Brian Armstrong has called for the next head of the SEC to apologise to Americans for the agency's actions affecting the crypto industry. Armstrong has highlighted what he sees as conflicting statements from the SEC over the past years and criticised current policies under Gary Gensler. He's endorsed pro-crypto Senate candidates like David McCormack and attorney John Deaton, expressing concerns about Senator Elizabeth Warren's stance on cryptocurrency. So he's echoing what all of us in the industry feel here. Armstrong has not endorsed a presidential candidate, but noted that the change in SEC leadership could benefit the crypto space.
He's not endorsed a candidate, but he is sharing infographics around crypto holders in swing states. And he's saying if you're a crypto holder, go out and vote, which I think is a soft sell for Trump. This is one of the greatest feuds of all time.
Mr. Beast, the famous YouTuber and TikTok star, has been charged with insider trading allegations for promoting cryptocurrency tokens. It's come out that there's been 50 linked wallets to him, and he's been promoting some of these that may not have fundamentals. He's going to be in a little bit of hot water here, and I think it's just a bad look overall. This guy, he's pretty loaded, right?
The fact is that the way they found it, it was hidden. It took a lot of sleuthing.
I don't remember him shilling anything.
This is probably a couple of years ago. It wasn't a hard sell, but the fact that it runned and people that he promoted it to lost their money, yet he got, I think it was over a couple $100 million, apparently. Okay, next up.
Yeah, Trace, another one bites the dust. Immutable are in hot water with the SEC. They got a Wells notice.
What's Immutable, Craig?
Well, Aussie homegrown guys, actually. They're a Web3 gaming firm. They're a layer 2 on Ethereum. They're positioning themselves as a bit of a gamer chain. They've got big games building on top of their blockchain, ones like Illuvium, which honestly, they've both failed to gain.
Been taking a while.
But then again, I've seen some really great stats about Immutable's gaming passport, which has something like 5 million people that have registered on this.
It takes a while to build. The Wells notice is regarding to their token sale in 2021. The token dropped over 13% to $1.16, and the CEO has said that they're ready to defend it and they're going to vow to fight for industry clarity. So just another story here. They didn't receive clarity and now they're in trouble for it.
And didn't they meet with them once? And then like literally straight after they went.
What's your mate Michael Saylor up to?
Yeah, Michael Saylor has come out with something called the 21-21 plan to raise $42 billion over the next 3 years, selling $21 billion in equity and $21 billion in debt to buy more Bitcoin. And this is absolutely outrageous. $42 billion. Who in their right mind has the ability to do this? These guys already hold 250,000 Bitcoins and one of the biggest Bitcoin holders. This is the most bullish thing I've ever heard. It's actually outrageous. So fingers crossed he can get this cash from TradFi to leverage his company into Bitcoin. It would be great to see.
Well, it seems to be working for them, Blake, because their stock is up 225%, and the whole purpose of the stock is to obviously gain access to the Bitcoin ecosystem. It's outperformed Bitcoin year to date.
Wow. It's because when you spoke to him, he spoke about MicroStrategy being a leveraged ETF, right? So the thesis then has to be that MicroStrategy is always going to outperform Bitcoin.
Okay, and one last story to round things out before we finish off today so we can get a quick swim in. There was a British Asian gentleman, I'm not even going to say his name because he doesn't deserve it. He's a macroeconomist. He declared himself the creator last week and held an event in London in which he sold tickets for £500, invited a bunch of press and people along, started to talk and explain why he was in fact Satoshi, and they asked for proof and he got his computer out, and then apparently the internet was down and he couldn't do what he needed to do and move some blocks and do whatever, and said, oh, I can't do it right now. I'll move some coin and I'll do some stuff in a month. Just keep an eye out. That is an absolute grift, but we'll see a few more of those. That's it, folks. Thanks for joining us today. We hope that you'll be back with us next week. We'll be back to our regular schedule. Until then, stay curious, stay connected. You can do this by joining the Crypto Curious Facebook group or our Instagram page. Be sure to hit the subscribe button wherever you're listening to us now. If you're looking to DCA into the crypto market, plan to use the Bamboo app. You can get $10 of free Bitcoin by using the code CURIOUS. There's a link in the show notes below. Thanks for joining us. We'll see you next week. Bye for now.
Bye, guys.
Bye, guys.